Appreciate you coming back for another video from NetPicks, and today we're going to cover the MACD indicator. But before I do, I just want to point out that with any indicator, you don't want to trade that blindly. So if you can add in some price patterns, some price action to it, you may find that the results you get are a little bit better. So you can grab this PDF download. It's totally free, and the link is above and below. So what is the MACD? Essentially, it's a momentum oscillator. Okay, it uses two exponential moving averages. And what it will do is it'll give you buy and sell signals. It will show you bullish and bearish divergence. And it will help determine your trend direction. Now, some traders will also include the histogram. Okay, and that's going to cross the zero line, as you see from red to green, green to red, when the EMAs cross in either direction. Okay, so that's what sets that zero line cross up of the histogram. The settings for the MACD, the standard setting are 12, 26, and 9. And as with any trading indicator, I always start with the default input parameters. Okay, very rarely do I change the MACD. I do. It's a little bit different. I'll talk about that in a second. I want to cover the calculation. It's quite simple. You get a 12-period EMA. You got the 26-period MA, right? You get those results. You subtract the 26 from the 12, and then you have the 9-period EMA. That's calculated from the 26 minus the 12. It doesn't matter. Put it on your chart, and it does it all work for you. You don't need to do any math. So what is that signal line? Well, the signal line is actually a 9-period EMA of the MACD line, right? So it's going to be slower than the MACD. And when those two lines cross, the MACD and the signal line, it's usually a trend reversal signal. Okay, especially when that happens far away from the zero line. Now for day traders, some traders may want faster settings. Okay, and just like most indicators, you can change the input values. And for day traders, a faster indicator cuts down on lag time. So the search for the best settings for these indicators, it's a trap, and a lot of traders fall into it. There is no perfect setting, okay? But whatever you do, make sure you test any changes that you do make to it. And as I touched on earlier, I do have one setting I like to use, and that is a 3-10-16. And that's essentially a variation of the 3-10 oscillator. And I do highly suggest that before you start crunching numbers and looking for a better setting, you got to know exactly how it works and determine if it's going to benefit your trading by making changes to the default settings of the MACD. So what does it measure? Well, the MACD line, that's faster than the signal line. We have to know this, okay? And it's the result of the difference between the fast and the slow EMAs. So as a momentum oscillator, when you see the signal line crossover of the faster MACD line over the signal line, that is a change in the direction of momentum. Not necessarily price, but momentum. So there are traders that will use this shift in momentum as a direction that they want to take trades in. And if you're looking at trend direction, let's talk about price direction. So the signal line, when it crosses the zero line, traders will often use that to determine trend. So essentially, you can combine the two. When you see the momentum change happen with the crossing of the MACD line and the signal line, that can give you a heads up that we may be seeing a potential trend change. And the zero line cross is a confirmation of the trend change. So just by knowing those two things, where you can measure trend and momentum, I think you can already see how we can actually use the MACD to actually trade. I do think that two-line cross is the more powerful of the two, and it's always been my preferred approach. I don't really use the zero line very much. So what's the difference between a bullish MACD and a bearish MACD? Generally, a MACD crossing above zero is bullish, crossing below zero is bearish. So let's expand that to include bullish and bearish momentum. And that's when the lines cross, regardless of which side it is of the zero line. So one strategy we can look at is a momentum approach. So we put the indicator on our chart. We're going to use the standard settings. And for this strategy, we're going to use the momentum feature of the MACD Plus, we're going to include breaks of swing highs and swing lows that take place when we have an imbalance of buyers and sellers. So we want to determine trend direction via the MACD for the strategy. Okay, so we're going to look where the MACD line is in relation to the signal line. If the MACD is below the signal line, we're going to look for a short trade. If it's above, we're going to look for buys. So this example here, this is an uptrend. What we're going to do is first, you mark off the current swing high and low points. Okay, price is going to break a high. That confirms an uptrend is in place because a uptrend is a series of higher highs and higher lows. When we see the cross on the MACD of the two lines, that shows us momentum to the upside. We will then use a buy stop order at the high of the candle that broke the swing high, or turn the indicator bullish when it crossed. Can we improve on that? Sure we can. We can use multiple time frame trading. And all we're going to do is trade in the direction of the higher time frame momentum. This is a 1 hour chart. The daily chart has bearish momentum. You can see that on the line on the left. We are only going to trade breakdowns through support with confirmation of the MACD. If price gaps through support, we're not going to take a trade. So the power of this approach is that we have bearish daily chart momentum. That's at our backs when we're going short on the smaller time frame. What about pairing the MACD up with another indicator? My favorite combination is the MACD and Keltner channel plus price action. The Keltner channels, that's going to show a market that's extended and primed for a potential retrace. Okay, we're going to look for a piercing of the upper or the lower Keltner channel to show extension. The MACD will show us loss of momentum, or it will show us divergences. And the settings for the Keltner is simple: 20 periods, 2.25 multiplier. So on our chart here, price is making lower lows, while price is piercing the lower Keltner channel. Now this is showing us an extended market oversold, and while traders love to counter trend trade, we need something else to happen. So in the black circle, we have price break lower, pierces the channel, and then we get a cross up of the lines. This cross shows us momentum to the upside while price is making a lower low. Okay, this is called divergence. And what is divergence? It's simply when the MACD heads in one direction, price heads in another direction. So we want to trade this reversal because this is our buy signal. Now entry, we can put a buy stop over the red candle, over the green candle, or a break of the small trading range. Our targets, we can have a couple, be in the middle channel line and the upper Keltner band. Now, a lot of times you'll see trends reverse when this happens. So having a trading plan that includes some type of trailing stop method could be worthwhile. Let's just wrap this up. I think it's a useful tool. It's got quite a few uses, and we covered them: how to determine momentum trend using the two-line cross, how to read momentum using the fast line, and the benefits of multiple time frame analysis. Now, as with all indicators, you got to test it out, and it's got to be part of an overall trading plan that includes entry and exit criteria, your risk management, the markets and time frames that you're going to trade. So again, what are the values we use? 12, 26, and 9. They're the typical settings with the MACD. Okay, you can substitute other values depending on your trading style and your trading goals. Now, a little tip that you can explore: as with any moving averages, we can explore consolidation plays when the two lines of the MACD converge. Okay, so when this happens, price is usually in a range, setting up a possible breakout trade, and then you can include a range trading strategy. Any questions or comments, put them below. If you like the video, give me a thumbs up. Talk to you soon.